The broadcast is now starting. All attendees are in listen-only mode.
Hi, everybody. Let's have a great week. Who's in agreement with me? So I come into Monday with not a lot of clarity. I look at the dollar here, and although it's stretched and overdone and could pull back, my work is saying there was just too much momentum to expect a turn. So when I have some confirmed highs, that puts me in the camp of not top picking, but looking for a break to buy. So I think a natural place for the Dixie to come back to, where it's going to have to prove itself, would be around 97. Back under 97, I think there's something else going on. Maybe we get some type of flag here, A, B, C, back down to 97-ish. Everyone give me a Y if you could see what I'm trying to explain here in the dollar, that it's hard for me to short a market with this much momentum going into a pullback. So, it's my contention, and like everything else, it's not always, there are always exceptions, that markets rarely peak when both momentum and price are confirming, right? How you been, Jeff? How you doing? Tillin, how's it going, Tillin, Soraya? So, so that cuts across the cloth of most currencies, something that I'm laying for, and really surprised it's not doing better with the S&Ps up, is shorts, looking to lay out some shorts up here in the yen at 11.5. I tweeted I'd go over the weekly setup, and this is it. So we're already outside of this weekly band here. What I liked going home was both the 250 week were pinching last week's range. Everyone see that? So to me, it looks like, and we haven't taken out last week's low yet in the end, but if we do that, looks like 109.5 is very viable, maybe even deeper. So looking for some type of rally. I think the BOJ meets this week, so maybe it happens then, or on a turnaround Tuesday. And some Ellioticians say that the jury's still out on this pullback in S&Ps, which coincidentally bottomed Friday. There was a Bradley date, and we held pretty good. When I went home, looking at this candlestick in the S&Ps, to me kind of looks like a hope low. But I know some Ellioticians that are actually looking for another high, because they're saying this pulled back in 3 waves. But I'll tell you something. One thing I do know is back under Friday's low, there's major problems. And for now, there are a lot of people with different opinions. I have to give the weekly negative outside week to the downside the benefit of the doubt. And as you can see, it held the 50 week on the S&P. So that also is going to be important. And I'd say also it's flirting back with the 200-day that everyone got very bullish about, it being over the 200-day. So here we are again. So Friday's low, I think, is a very important low. I heard that Paul was on 60 Minutes, and he announced a dissolution. You'd like to see one more high? Okay. I wouldn't. Anyway, but it doesn't matter what we want. The market always does what it wants to do, right, Tiana? So I heard that Powell announced on 60 Minutes the dissolution of the plunge protection team. So the bulls better get ready to defend should the S&Ps take out the low of last week. Just want to talk about gold. A lot of people were looking for a rally to sell. Last week I was on with Steve, and when the euro, during the ECB, the euro was getting smashed, and gold continued to hold the low at this 280, 285 level right in here. It wasn't making a new low with euro, so those are the kind of market tells I look for. It's rallied back to its breakdown line like a retest. So I know some people are trying it. So if I'm right about the yen, it's very possible that there might be some more upside. If I'm wrong about the end, this was a great shorting opportunity. We'll see. But one thing I did notice for sure, and it's even holding up today, is that silver has become the relative strength leader to me in the last couple of days. Much stronger signature on this reversal day than you had in gold. It was up 2% on Friday compared to gold's 1%. And I know Steve showed the gold silver ratio chart and thinking that it could go back to new highs. But if you're monitoring that chart, and I don't have it, it's also possible that we will start developing a right shoulder on the gold silver ratio. Anyone following that? It's a pretty interesting trade should it set up. So that's the two options, is that the gold silver ratio could head up to the highs at 88, or we're putting in a right shoulder here. What do you think, Zig, on the gold silver ratio, which makes gold the preferred short on strength for now, and silver the preferred long on weakness? So crude, I'm neutral on it now, especially after Friday's action. I don't know, maybe there's some Venezuela stuff here. Things are getting pretty tense, but after it did this, really after it took out 5660 here, breaking out of this little triangle here, and now we're above the moving average. It's a tough call to me. We could either fail from here or maybe shake out the longs with another move up towards 59. I think this daily comes in the megaphone line. It could be adjusted down just a little bit, comes in right around the 59.60 level. And, if this happens, then maybe the people are looking for one more high in the S&P, since they're acting like Siamese twins lately. Could be right that there's another high coming in S&Ps. So the team, they're taking New York by storm. One of us will put up the link here in the room for you to watch the presentation of the expo live with Steve and Joe presenting. I think Rega may too. So that'll be a live streaming broadcast. I believe it's 1:30 Pacific time. I don't know, Blake has all the numbers on it. And the guys put together a real nice booth, and it looks great. And they are the cleanup hitters of ForexAnalytix. So if you're in the New York area, drive down, say hello to the guys. They're all gifted and humble. Pretty rare combination. And remind everyone to go to our sponsor and set up another account and see if you have a good racehorse, and get to know Trent and Justin and participate in the reimbursement program. And you already know what I think about these guys and the team here. So if you haven't tried it yet, you're really doing yourself a disservice not to spend $1 to check it out. So Blake, how you doing today, bro?
A little rough around the edges. I'm back on your schedule.
Yeah, I didn't rub it in last week.
Man, it is. And it was tough getting up this morning. So I'm doing all right. Other than that, I was short a little euro pound over the. I shorted it on the spike up on the open, and then I just closed it just like about 15 minutes ago or 10 minutes ago. And just kind of playing around a little bit. This is going to be a really big week with Brexit, so it's excuse me, it's going to be a real big week. And what I was just thinking is, whenever we go through this time change, it catches a lot of Europeans off guard, because remember, we're doing the time change here in the United States.
Oh yeah, they have another couple weeks.
Yeah, they have another couple weeks. So
3 weeks.
Is it 3? Is it 3?
Yeah.
I was wondering why we only had 3,000 people in here today. You know, a light crowd like that.
No one wants to hear yawning Blake. No, but seriously, it's always, it catches a lot of people off guard, and it screws up everybody's schedules for a couple of weeks. So it's 3 weeks, huh, Stelios?
Yeah, you said 3.
Very good.
Yes, that's correct.
Three drives to a time change.
Yeah, right. Drives to a time change. So what I figured, since I'm going to be with you guys this week, probably the entire week, because I think Steve gets back Thursday night, but I doubt he's going to have much to say on Friday. I'm sure he's going to be kind of a tired train wreck from flying all over the place. But it looks like the guys are having a great time. If you're in the New York area, make sure you stop at the expo today, because today is the day where there's going to be a lot of people. Today's the FX day, I think, for currencies, or for the currency market. You're going to, or excuse me, for the currency traders at the FX Expo. So make sure you guys. I know a lot of our people are going out to meet up with them tonight. I think is where they're doing drinks. Is that correct, Stelios? Is tonight?
I think so, but knowing Steve, it's probably going to be every night. Yeah.
Steve,
I think it's tonight.
He isn't much of a drinker. I don't know about that.
He is not. He's not.
No, but if it was you and I,
yeah, you guys are.
If it was Stelios and I, it'd be a different story.
So, what time is the live stream?
I don't know. Do you know, Stelios, right off the top of your head?
No, I don't. I'm sorry.
I think it's at 3:30 Eastern. I think. Okay. Something like that. It's
that rings a bell. Actually, I think you're right.
Yeah, it's something like that. But I know it's later on today. So, but in the meantime, what I'd like to do is I'd like to go over some of these majors, and remember, since I'm going to be with you guys this week, if you guys have any questions or pairs that you want to take a look at specifically, let us know. We got retail sales today out of the U.S., so it's going to be a pretty big number. It might actually set the tone for the week. Because we have, after the week in unemployment or weak employment data on Friday, whether or not we follow through early this week, it has probably a lot to do with what happens in the next 18 minutes. So I'm going to take a look at some of the majors, and then after the data, if you have any specific pairs that you want to look at, I'll look at those as well. So,
Blake, did you watch the Paul?
No, I didn't. I didn't get an opportunity. We've had flu going around our house, so I didn't get a chance to watch the interview. I read some comments on Twitter like that, and from some email research that he didn't really say much of, anything.
Yeah.
I heard you say something about the plunge protection team, but
that's a joke. Yeah, that he dissolved something that doesn't exist.
Oh no, I don't. I heard he didn't say anything really too.
There were actually, if I may interrupt, just two comments that he made, which is he's actually quite neutral, but he did say two things. Again, I didn't watch it, but I read a nice summary of it. He said that there's no clear time limit to the current pause on rate hikes, and also, so this is a little bit on the dovish side, because it's like, it's supposed to be temporary, but he's saying there's no time limit, so it could be the end, full stop. But he also said that the U.S. economy is actually doing well, it's favorable, but there are many risks from elsewhere, like Brexit and Europe and China. So that was a little bit more positive, but then that balances out with the other comment, which was a little bit more negative. So overall, I think he was quite neutral, from what I understand.
Got it. Okay. Well, thanks, Stelios. That helps. That helps quite a bit. Okay. So let's take a look at these majors. So the euro, and if you watch the week ahead video, you probably got a pretty good a view of what I was thinking over the weekend, because not a lot's changed, except the pound actually dropped to some lows, got everybody excited. I got a bunch of emails from some of the banks that I'm subscribed to through our office at Gelos. They I get like research from a lot of different banks, people all freaking out because the pound was below, the 200-day moving average, and everybody's like, oh, here it comes, and watch out, the pound's going to break down, and then of course the pound's up this morning. So we got below the 200-day moving average, and we were back above, and this is a 38% retracement, as you guys can see right here. It's also a 618 retracement from. I deleted the fibs because it was a little too messy when I zoomed out. But you can see the 618, 38% retracement, 200-day moving average, channel support. We bounced off of all that. So does that make me bullish the cable right at this moment? No, not necessarily. I actually, like I said, I sold the euro pound at the open at 86. It was pre-open. I got it. I can trade 2 hours before most of you guys can on my system. So I got a trade off at 86.65 is where I was short, and then I closed it this morning at 30 or 29. So I took some out of it because the euro pound like bounced up towards the 50% retracement. And I'm like, I'll sell it all the way up to the 50% retracement. We didn't quite get up there pre-market, but anyway, going to the euro. We had this potentially false breakdown, and we're bouncing from 112. So, and this is the major 618 retracement, and this is on a weekly basis. So there are a lot of banks right now that are like, hey, as long as we stay above, we basically stay above this 111.50, it's time to be long. I don't necessarily subscribe to that just yet. However, I can't help notice that yields look like they might come down. I know they're up this morning, but bonds look like they might continue to rally. And if yields come down, then yes, that could spur some reversal in the dollar. But right now, I think with the euro dollar, you got to watch this 38% retracement this morning, because if we get above this right here, it's 112.70. We get above that level, that's gonna start sparking a little bit of a short squeeze back towards 113 and maybe even higher. The cable. Again, this is channel support. You can see this is like just a down channel. Resistance is going to be right back up here at 131. Should we get any spikes? Remember, this is a big week for the UK. Stelios, are you here?
I am here, yes.
Okay, so the meaningful vote is going through tomorrow.
It's supposed to be going through tomorrow, although there was a headline today that Prime Minister May is considering her options. So until further notice, it is going on tomorrow, yes. Okay, so we got 3 important votes possibly this week. We have the meaningful vote, do we leave with or without a deal, and then the last vote on Thursday is going to be an extension potentially. So the cable is going to be in for a lot of volatility this week. Everybody knows it. That's why you have to be a little bit more, like for me, I was, just trying to take some profits when I could, before I get any. I don't think we're going to have any clear-cut direction today. So if you're a cable bear, for those of you that are just, I'm selling pound no matter what, you might wait for a rally back towards 131 and look for a short up there. And if you're looking to be a buyer, then you might want to try to buy, near the lows if possible, back at this confluence down below 130. But while we're trading below, from 130 to 131, you got to kind of trade the ranges and just kind of, take a little bit when you can, I think, because until we have some sort of directional reason to be long or short. The Aussie, I put up this chart because we didn't break 70 cents. Now, the Aussie is at risk of having this little inverted head and shoulder pattern that could, we break above 70.60 and 70.60, and we might start squeezing up towards 71 cents again. So, watch the Aussie. The Aussie has not broken down. We might have another
we might have another leg higher before an eventual move lower. I think that the Aussie dollar is an actual short. Not right now, though. It's not something that I'm playing on the short side just yet. I want to see a nice clean break of 70 cents, or move up to like 71.50 to be short somewhere up here. But right now, I'm just not trading it at the moment. The Kiwi, we're challenging underside of this broken trend line. This could squeeze up a little higher. Remember, we're in a symmetrical triangle here, so we happen to be near the middle of the symmetrical triangle as well. So keep that in mind. Dollar Canadian actually is holding up very well, even with crude oil as strong as it is, and that to me is a little surprising. I would think that that with crude, closing back above $56 and looking like it, was going to squeeze it, and did. Why the dollar Canadian hasn't dropped further probably has more to do with the Canadian weak data that we've seen, but still, it's surprising that we didn't get a pullback. I was actually looking for a move back down to like 133.50 down here, so I can establish a new long position. So personally, I was hoping that would happen, but it hasn't happened just yet. The dollar Mexican peso is still holding above this 1247 level. I think it still looks pretty bullish, and we are challenging the 38% retracement longer term, but I think the dollar Mex is probably going back up to 20. I do have a long position in the dollar Mexican peso, and I'm looking to add. Not the South African rand. Here's the Swissy. The dollar Swiss. We did have a false breakout on Friday above parity, Thursday, Friday. I'm watching the dollar Swiss for a break below 1.0050 for a continuation lower. This is a nice setup for me, especially if yields start to come back down again. So I think that that's going to be a risk for the dollar Swiss. The U.S. dollar Norwegian krona. I have to tell you what. Stelios cherry picked the top there. He'd been saying, if you guys are in the chat room, Stelios had been saying all last week, I can't wait to short the U.S. dollar Norwegian krona at 880. And boy, did he. I don't know if he got it at 880. Yeah, 880. He put it out for his active pattern in play. And Stelios, great job there.
Nice, Stel.
Thank you.
You'd been saying, I'm waiting for 880. I'm waiting for 880. And I'm like, if we get to 880, we might break out. And boy, I tell you what, it did the
same thing in EG at the top. All of us go, what's this macro guy thinking? And he nailed it.
Well, I think it was pretty awesome. Now, what's going to be even more awesome, Stelios, is if we get if for some reason you're right and the dollar does turn south, due to data and and maybe we see crude rally. I don't know, but maybe if it's just data, we could have a nice double top setting up here. We get below 844, 845. We could trade right back down to 810. That would be a home run for you. So
yeah.
Now, if you want.
Go on.
No, I was going to say you can mention that, but I was going to say, has anything changed as far as your ideas with the Norwegian krona right now?
No, I mean, I still believe it. And this morning, we had Norway CPI came in at 3%, so higher than expected. And the market had been thinking that the burst of inflation was going to be short-lived. Well, it remains at 3%, so it's quite a bit above the target. So that's I still believe in the trade, and the only problem is that we have Norges Bank, which is very cautious, and it's a good thing to be cautious. And as the global economy starts to turn, and we see that with European data, the US as well, they can't be going out hiking like crazy. I think they're going to hike. They're still at 0.75% in terms of rates, so near all-time lows, but they're going to take it slow, and that's the only problem I see. But still, from a fundamental point of view, I see no problem with Norway whatsoever. Their reliance on oil, we know, and oil can be very volatile, but still, I think I really like to trade, and I am short against the euro as well.
Great. All right. Well, it was an awesome reversal off that 880 level. And now you know your risk. I mean, it's, bottom line. I mean, we break 880. It's probably going a lot higher. But now you got such a good entry there, such great managed risk. You can actually move your stop to break even and just hope for the best.
Do you do that still? Is that your style?
Hello, traders. My name is Blake Marr.
You would tighten up the stops, and personally, would you take, a piece off the table like Steve does, or you're just, you just hold till targets? What would cause you to tighten up the stop?
I usually do that. I usually take partial profits and move the stops. I know a lot of people don't like that. They when they hear about people moving the stop to break in, say no, but it doesn't make sense. But for me personally, psychologically, it makes a difference. It's very different to be trading with a position where that your downside is actually zero, and it's not actually zero because you might lose going to zero, right? When you get out of break even. But psychologically, if something helps you, I like it. So yeah. I personally do that. Other people don't, and it's absolutely fine not to do that. So I do take partials and I do move my stops to break even. And now on this particular trade, like Blake said, if we go above 880, something will have changed materially. So that will make me get out straight away. So my stop will be at 880 pretty soon, actually.
Awesome. I like having a no risk trade on. I don't know who wouldn't like that, but anyway.
Yeah. I mean, it's
each their own.
Yeah, it's a wonderful trade, Stelios. So now the U.S. dollar, Japanese yen. This is another pair that I think we need to watch. Equities are a little higher this morning. It's keeping a little bit of a bid in the dollar yen. But if we break Friday's lows, which comes in at roughly 110, I'll actually set up an alert here so we can get notified. Like 110.80, we break below that, and that's going to be a fairly bearish event for the dollar yen. And I think that if that happens,
traders, my name is Blake Marr.
A little skeptical about being long the dollar in a situation like that. So,
hey Blake,
yeah,
where does that blue moving average come in? Just above it?
This is this is the 48 exponential moving average. It comes in around 111.40.
Thank you.
Yep. So, and matter of fact, we are about 2.5 minutes away from retail sales. So this is Bloomberg, so you guys are gonna be able to see this as it pops up. Let me go ahead and grab. I'm gonna actually bring it into a 5-minute chart in the dollar yen, and then let me bring back up Bloomberg here. And this is what the market's looking for. Now, you guys are going to see this here before you see it on Twitter. And let me explain a little bit about Bloomberg. So Bloomberg is, between Bloomberg and Reuters, you're going to get the data first. You read the stuff on Twitter. You have to imagine people actually take this data here. They'll copy it. They'll go over to Twitter. They'll paste it. By the time that's all happened, you've lost a second or two. And in a second or two, these algorithms can come in
the chat rooms,
and they'll get so far ahead of you by the time you're buying or selling, especially if it's on a strong or weak number. They've got a way huge leg up on you guys already. That's why you have to be real careful about trading off of news. It's like you have to be already pre-positioned ahead of the news, based on maybe some technical levels that you saw. But I try not to trade off of news. If I didn't catch it right as it's been released, I'm definitely not trading it off of Twitter or anything like that. If you're trading news events, obviously I'm almost 95% of the time I'm in trades during news events, but it's not because I'm establishing them 2 seconds before, because I'm just not fast enough, to take advantage of, these algorithms. I can't beat them. So I have to try to beat them in other ways, meaning that, I'm positioning myself ahead of the news, like usually a day or two in advance, if it's something that I'm going to do. All right. So heads up. So we have retail sales. And here 5 seconds. Strong numbers.
Strong,
Good
yeah.
number.
Oh, bad revisions though, but still.
Oh, revisions. Oh, yeah.
Kind of canceling each other out, right?
Yeah. More or less, yeah. So, yeah, we got a spike up in the dollar yen, and we coming down just a little bit, but still, the headline number is pretty good. Euro dollar didn't really move a whole lot. There, let me move this out of the way. Okay. Euro dollar, spiked down. It came right back up again. The cable, not doing a whole lot here either.
It's a big dud, I think.
Oh yeah, look at Aussie. Look at the bid in Aussie. Equities just kind of they're a little stronger here. Kiwis got a bid. Dollar Canadian spiked up and came down a little bit. Let's see what the Swissy do. Swissy spiked up and came down. Let's watch this euro, because if the euro starts getting above like this 112.50, it's going to start to squeeze. I think those revisions really are, having a little bit of a knock-on effect on the dollar here. I think that's what's, keeping the dollar down.
If anyone's wondering why the futures in the Dow are down 190 and the S&Ps are up 440, it's Boeing because of that airplane crash. That's most of the impact there.
I'm sorry, I missed that. Could you explain what happened over the weekend with there was a crash? I wasn't.
Yeah, there was a plane crash, and I think it's a Boeing. It is a Boeing jet, and it's a second similar makeup jet that's crashed, I think, in the last month or two.
It was
really?
A 737 MAX, and second in a few months. And actually, China said that they're going to ground all these planes from local airlines going forward. So that's hurting.
Where did that happen again?
Ethiopia.
Oh wow, that's scary. Wow.
So Boeing, I think, is down 10% in pre-market or something like that.
Hopefully, Steve and the rest of the gang are riding on Airbus. So, all right, let's see if there. And by the way, Dale, if you see any questions come in, and just feel free to ignore or to let me know as they come in. All right, let's take a look at some of these yen pairs really quick. So the dollar yen. We spiked up, and looks like we're coming off again. Keep in mind the dollar yen is as long as we're trading. I bet you this is a 38% retracement right above. So as long as we're below that is a 38% retracement, 111.30. Yeah, I think the risk is the dollar yen continues to come down here, but equities aren't moving anywhere. Wow, look at the cable spiking up. It's squeezing here. Cable squeezing a little bit. I got a little trigger happy with my euro pound, it looks like, because it's still coming down. Hold on really fast. Let me take a look around here.
I don't see any headlines, but there was earlier today a statement from the EU that they've made proposals on further reassurances on the backstop, but this is not news. So we haven't had anything firm yet to date. Right.
Let's see. Let's go take a look. Here's the dollar yen, euro yen. Just kind of bopping around. This is something that I'm watching. Actually, I don't know if I said it during the week ahead video. I can't remember because I talked about a lot of things. But you got to watch this euro yen as we approach this 134 level or 124 level. I think a break below 124 is going to be pretty bearish. We got this could be viewed as a bear flag pattern here. Mm-hmm. So you know what? Let me adjust that different color. This could be a little bear flag pattern in the euro yen. So I think if you're bullish, you got to be a little cautious of that if it starts to crack lower.
Blake, sorry to interrupt. Yep. Two things I'd like to very quickly say before I forget. One, thank you to everybody who pointed out that the live streaming of Joe's presentation is at 3:30 Eastern Time today.
Great. Do you have a link?
I don't, but I will find one, and I will put it onto the chat box. And also, our friend Brian is asking, when you say squeeze, what does that mean? It means it's going to go higher.
Yeah, typically a squeeze, when you get a squeeze, it's a squeeze higher. That means people were short and it starts to squeeze higher. Forex Gal, it looks like just put up a link. Also, if you follow us on Twitter, our ForexAnalytix account will make sure that we tweet out the link as well for you to watch. So thank you. Thank you, Forex Gal. And here's the New Zealand yen, kind of sideways. This is a very, very. It's going to be. By the way, the market's going to be a lot more exciting tomorrow, I think, with the Brexit news.
I just put the link on the chat box, by the way, for everybody. I found it.
Thank you. All right, look at this euro pound getting smoked here. Man, I took that a little too early. So, watch this euro pound. I think, you know what? This could be no, never mind. I was thinking something else. 50% retracement is holding it thus far. You can see that 50% retracement right here. Okay. So I think everybody's just trying to get pre-positioned. Let's take a little bit of a look at gold. Gold, if you're a bull, you got to be a little nervous here. And this is the one thing that I think that if you are, if you're shorting the dollar and you're long the euro or you're long the cable or you're short the dollar yen, this is the one thing that I think you got to watch out for, because if gold breaks above this resistance, I think that's your cue that you need to be a dollar seller. Okay. But right now you can see how gold is just kind of, there's a breakout point, support. You can see support, rally. We broke down through that previous support, is now acting as current resistance, which is just technical, is about as technical as they come, right? So what you have to be careful with is if gold continues to hold below this 1300, it's going to be very difficult for the euro to continue to stage a rally. Now, if gold can break above 1300, 1305, then now we're talking about the potential for the euro to continue to squeeze higher. I think that becomes more of a risk. But one of the reasons why I'm not currently buying the euro expecting a move to 113 is because gold is just kind of struggling to make any headway here. So that's something that we should all take into consideration. Silver as well. I mean, silver is just kind of hanging out. It's not really doing a whole lot. Let's take a look at a couple of these crosses. The euro Aussie, we're in this nice little, very well-mannered channel. Nothing to do there. Here's the euro New Zealand. Were you going to say something?
Oh, just a question about USD SEC.
Yep.
When you have a chance.
Yep. Okay, I'll be there in 1 second.
Okay.
So the euro New Zealand is trying to break down through this triangle, which I think it'll target trend lows. So you had a question on the US dollar and Swedish krona?
Yeah, Forex Gal.
Okay. Let's see. What did she write? Forex Gal. I didn't see it. Did I? Well, she just wanted to see what about the U.S. dollar, Swedish krona, if there's anything happening here. I got it. I was looking for a little bit more elongated answer.
Just your thoughts are enough for.
So you know what? This is one of those currency pairs that if the dollar continues to strengthen, I'd rather play this currency to this dollar pair to the upside. If we continue to strengthen, the reason why is the obviously this bullish pennant formation that we have here. Notice where I've got the circle. Okay, notice this right here. I'm trying to grab it. This right here. Okay, notice how when we came back and retested that trend line, we retested it here. We retested it here. We held both times, right?
Yeah.
So if I wanted to play dollar to the long side, we are in a very bullish formation here. Now, the flip side of that is if the dollar really starts to sell off. So let's say we start to see, some, pretty big dollar liquidation. And then the dollar Swedish krona gets back below 119, 919, 918. Then you have a big double top setting up. But, if I look at dollar pairs and how I'd like to play the dollar on the long side, if I was going to go that route, it would be the US dollar Swedish krona, because it looks bullish. It looks bullish. Obviously, bulls need to be pretty careful here that we don't just turn lower in the entire index, because if we do, then you do set up a double top. But I think probably one of the most bullish dollar pairs around is the US dollar Swedish krona at this moment. That doesn't mean that it's going to stay that way. That just means at the moment, that's, it does look pretty strong.
ForexAnalytix says, thank you, Blake.
Sure thing. Okay, now, Stelios.
Sir.
Okay, so let's talk a little bit about this week, and let's talk a little bit about the pound and what to expect, because it's such a big week for the cable. So yeah. Tomorrow, what do we have tomorrow?
Okay, so tomorrow we have May's New Deal, whatever that is. Actually, I don't think we do have the exact details of what has changed from last vote. But this is what she's going to bring her deal to vote in Parliament. It's a plan to spectacularly fail unless something major has changed. So that, I think, the market is already pricing in. And also, as an aside, we also have some important data tomorrow out of the UK, but that's a little bit less relevant now.
Yeah.
Yes. So that, assuming that nothing changes with the backstop, which is really the stumbling block for both sides, which is the Irish border. If nothing changes with that, then the deal is not passing. And then on Wednesday, that's tomorrow. On Wednesday, the members of Parliament have to vote on actually allowing the UK to leave the EU without a deal, which is a big thing. It's not by default that, you don't have a deal, so you leave without a deal. They actually have to vote that they allow for that to happen. If that vote fails, which means that the members of Parliament do not want to leave without a deal, and remember, the Labour Party are all in favor of this, so they want to have a deal, and a big chunk of the Conservatives also have they want to have a deal. So I think that's also planned to fail. So the plan is tomorrow, as far as I'm concerned right now, and unless there's a big change, tomorrow May's deal gets rejected, then the no deal Brexit gets rejected, and then on Thursday we get to the end, which is the last vote, which is to extend Article 50, and that is yes.
I was just going to say, there's murmurings of, extending Article 50, but also, is there even any remote chance that there would be another referendum?
There is always such a chance. Yes, it's low, but May actually mentioned it. She said on Friday, among other things that she said, if you don't accept this deal, then we might not get a Brexit at all, or we might get a second referendum. Probably doing it to strike a bit of fear in MPs, but because they know that the people have voted, and if they go for a second referendum, I don't know how well received it's going to be by the British people. So there is a chance. Yes, it's not a high chance, but there is always a chance. And the more we delay, the more this chance gets larger. It's only natural. So that's where we are right now. And The other thing is, if we get to extend Article 50, if the members of Parliament vote to extend that, then it's not a done deal either, because it has to be unanimously approved by the EU. And now the EU spokespeople have said that it is, they're willing to do it. I think Juncker was who said, yeah, of course, we're willing to do it, but then it will still have to be unanimously approved. And that's another risk, which exists. So. Sure. It's complicated. That's the thing. It's complicated, and the market seems to be a little bit complacent at the moment. It kind of the way I read it is the market thinks that we're going to get to Thursday's vote. There's going to be an extension, and then after that, well, let's see what happens.
Okay. All right. Well, I think the pound right now technically is holding a lot of pretty key supports, and I'm actually, from somebody who wants to play the cable to the long side, which I obviously did last night, and I want to try to continue to do so. Playing the pound to the long side, it gives us a little bit of hope right now that we're holding above this. Well, the lows from overnight at 129.60 are holding, and I think while we stay above that level, the risk is higher. Now, if we break through the lows from today, I think then the risk is a move all the way back down to 127. So I guess what I'm trying to tell you guys is, as we trade at 130.35 or 36 right now, if we get a dip, slightly back below 130, I might actually end up trying to play the pound back to the upside once again, as long as there's no, specific reason why it's coming down. But I think that's going to be my, the way that I trade it for now, while we trade above the lows from the weekend. I think that or from the open on Sunday. So
Blake, sorry to interrupt. Amanda just wrote that she thinks May is making a statement at 3:30 UK time, so it's in about 2 hours, 2.5 hours. And Jeremy Corbyn has some questions as well, so we're gonna follow that.
Okay, so that's in about 2 hours time. So we might get a little bit more volatility heading into that. I would assume.
Yeah. Thank you, Amanda.
Thank you, Amanda. I really appreciate that. Let's take a real quick look at crude, Coach. You've been a bear in crude. What changed?
The action.
The price action.
Not getting the breakdown and a couple of reversal candles on attempts to break down, Blake. You could see, what happened Friday, and there was another one of those, not as extreme before. And look at that moving average. So it's possible now that we're going to get another new high. So that would line up with Stell's call in the NOK. And maybe the S&Ps, have another run in them, but it doesn't. It just looks more like a time correction. And if it was going to go, how when things take too long, you become a little jaded. Look how much time it's given people to short it up here for correction. So, just my skeptical nature of markets making things too convenient.
No, I think it's rightly placed. I mean, we've had all the time in the world to try to break down in crude, and we haven't. So the fact that we haven't broken down in crude, I think would make anybody who's short a little nervous. So I think it's
when in doubt, out.
When in doubt, out. There's being in our chat room throughout the course of the session, there's a lot of traders that are obviously in there. Well, look at the cables just popping again. Hold on, here we go.
Cable, if there wasn't this bulk, Blake, I would say, looking at the cable chart that you showed, that we're going to make another new high towards 34. Just based on what I see in RSI, the last high did confirm up there in the pound. So I wouldn't be surprised.
Yeah, we could. Did you say 134?
Yeah.
Yeah, I mean it's entirely possible. The thing about the cable here is, like I said, I think it looks pretty bullish. Okay, so the peso's coming down.
It would actually be above 34, because 34 was the last high, so maybe 35 even.
I mean, I look at the cable and I still think it looks pretty bullish. So you're talking
like
about
a two driver to me. Here. You see that? Two drives, the one that we two, and now another to come.
Third, and it's also again, this is a big inverted head and shoulder pattern. So I obviously think if we get above 133.50, it's going a lot higher. But
it's a lot of guts to go long into this environment. and I don't have it. I don't have them anymore.
You don't have the nads.
No, not anymore. I've had my teeth kicked in a few times.
Yeah, when you get your balls kicked in a couple of times. That happens too. So the dollar yen is showing a little bit of weakness here, which is interesting because equities, they're relatively strong. I mean, take a look at the S&P. And by the way, this is, if this is Monday and we set up for turnaround Tuesday, we have the S&P that might, come back up to 2760. This is where if I was a S&P shorting man, I'd be shorting right around there personally. Yeah. And matter of fact, let's do a little bit of work here on the S&P since we're looking at it. We're coming up to a 38% retracement, maybe even the 50% retracement at 2770. Will give you a good opportunity to be on the short side. I think that's the way to play the S&P right now with manageable risk. I think you could, be looking at the shorts, at the 2765, 2770 and put in a fairly tight stop to take advantage of, the reversal out of this ascending wedge. But, this is Monday, if we get a nice move up today and by the end of the day, we close kind of where we're at right now. And it may be, an up day, but that sets up for a turnaround Tuesday for those of you that are looking in that direction. I don't think that's a bad way to think about this market right now. So, excuse me, really quick. I'm going to make a couple of adjustments here. Okay. All right. Let's take a look at some of these other crosses. The Aussie New Zealand. So this currency pair, we've come out of a bearish wedge. We are below the 618 retracement. Now the Aussie yen looks like we want to go to 102.50. All right, this is the 88% retracement, and I've been, thinking about being long the Aussie New Zealand somewhere down here. Like when I say down here, I'm talking about in a general sense, not right here at this price, or I've been wanting to be long the Aussie New Zealand down, for the last few weeks. I've been, thinking, okay, where do I get long and how do I get long? I don't know if this is the right place necessarily. The Aussie yen is still under pressure. I want to see some sort of reversal pattern develop. What I'd like to see is if we get a move down to, let's say 102.50, and then we show a bullish reversal on a candle or something, that might provoke me to getting long. But I'm trying to be patient here. And thinking that once a China-U.S. trade deal is done, there's going to be a lot of activity, not only in the Aussie, but I think in the Kiwi as well. I think, the Kiwi is going to be a short, not just the Aussie, but I think the Kiwi might actually play a little bit of catch up with the Aussie. And that's why I think that the Aussie New Zealand might be a good long here at some point. But it's something that I am keeping a pretty close eye on at this moment. Let's take a look at some of the other indexes. And by the way, Dale, do you have an interview set up for today?
He does actually. Yes.
He does. Okay, he does. All right. I didn't get a chance to look at the schedule. That's one of the problems.
We have Peter Goodburn.
Okay, good. All right. Just want to make sure that I'm not running into anybody's time. So the DAX, the DAX is in a big head and shoulder pattern. All we've done thus far is we've retraced back to the neckline of the big head and shoulder pattern. And I think we got to watch the DAX carefully because, man, this cable is still strong. If equities continue to, show some signs of weakness in the S&P, it's eventually going to bleed over into the DAX. So I know the S&P has been bouncing, but look at the DAX's bounce has been fairly light. So watch this uptrend line in the DAX and watch the support right around 11,400. I think if the DAX starts breaking below that, then that support right through here then that should open up some downside in the DAX. I think the risk, the way to manage risk in the DAX right now is very manageable, and that's what I look for when I'm trading. Is I'm looking for, always favorable risk reward. If your risk is, like, let's say your risk is here, your risk is 11,800, but your reward is 11,600. Okay, and we're trading at 11,500 roughly. Okay, so you're risking, or I'm sorry, 10,400. So you have a risk of, let's say, 350 points, but you're looking for a gain of like 900 points. And that's good risk reward as far as I'm concerned. So that's why I think that if you're looking for shorts here in the DAX, I think that the risk reward favors shorts at this point. Doesn't mean you should be short now, but looking at the S&P, if the S&P, you see it start to reverse, I think the DAX is set up pretty good. And speaking of other indexes, let's take a look at what's happening in the Nasdaq. The Nasdaq, very similar to the S&P, where we got a nice little bounce. We're looking like we're rolling over. We're bouncing right now, but this is I think very early in the week, and like the S&P, I think this bounce sets up for further downside. So you can use these bounces as an opportunity to be on the short side of the market here. Here's the Dow. The Dow, because of Boeing, as Coach was talking about, it's setting up the same. But you can see the Dow hitting a lot of resistance up here, nice resistance zone, and rolling over. Is that the 200-day move? It is the 200-day moving average is just below. Yeah, so we're not too far off the 200-day moving average here in the Dow. So, Coach, before I turn it over to you for the last couple minutes as you bring on the interview, any comments about anything else?
Yeah, I think the work that Steve and Joe did, and Grega, to really represent us well. I mean, what a beautiful looking booth. And, isn't it nice when you could feel confident with the people that are representing you, that, you don't have to worry about being embarrassed, or, that they're going to represent the company well. And, just proud of the guys and the team, and, efforts of flying across the ocean. It's not easy, to just, pick up and go. And, Grega has, a lot of responsibilities, and Steve, workaholic, and Joe, it's easier for Joe, but Joe is kind of the driving force behind this. So just proud of the team, Blake.
Yeah, I'm first of all, Steve is one of the most capable people that I know. And he's real, he's mastermind and taskmaster of getting things done. And between him and Grega and Joe being there to represent ForexAnalytix, I think it's awesome. And speaking of which, I think, if I'm not mistaken, one of Forest Park FX's guys made it to the show. I think, I'm not 100% sure, but speaking of which, if you guys are not happy with your broker and you're looking for a better solution, make sure you contact Forest Park FX. You can get to them just from our website. You just click the banner on how to get involved in the reimbursement program. Their Skype and email right here. You can get in touch with them directly. They're a great group of people that we've really had the pleasure of working with for the last couple of years. Steve is a client of theirs because if you're in Europe, you can actually get cashback rebates, or you're in Europe or anywhere outside of the U.S. And if you want to get in the reimbursement program to help subsidize your ForexAnalytix subscription, you can do that too. So make sure you get in touch with them. And I'm going to go ahead and put the link right here in our chat box. And Coach, I'm going to pass everything over to you. I hope you have a great interview today.
All right. Well, thank you very much, Blake. And again, with Forest Park FX, the ingredient of trust. So Peter Goodburn's in the house. I want to thank Peter for taking the time to step up today, and it's one of my favorite guests. So, Peter, welcome back. I just made you the presenter. Looking forward to catching up with you, my trading warrior brother.
Hi, Bill. Can you hear me?
Can hear you loud and clear, Peter. How are you, buddy?
Hey, great. Thanks. Yeah, pretty good. How are you?
Good, good. So I think we're at some crossroads here, and when I think about turning points and crossroads, I think about you and your work. I follow it. I have people I mentor that follow it. People that are in face follow you. So I'm very interested in, for example, I know that you have said that we actually had a reversal signature in the S&Ps, and I want to talk to you about that because, just like Ellioticians have alternate counts, and I've seen that you have alternate counts. Some people are saying this was only a 3-wave decline into the lows of Friday, and I don't know if you follow it, but there was a Bradley turn date on Friday that so far is valid. What is a reversal signature? And we're not seeing your screen yet, buddy. If you could share your screen and give us what your definition is of a reversal signature. I use something very simple, Peter. I just count back 2 weekly candles to know whether or not we're above it or beneath it for 2-week reversals.
Okay, sure. Well, I'm just trying to activate my screen. I'm
okay. What a long question. So you go up on top. Right now we're looking at Let's Get Started, and there's a drop-down menu up there that says Share Screen, and you perhaps have it on the wrong screen right now. So maybe you try it again.
Okay.
Share
well,
screen.
let me just. I'm just deactivating it, and let me just click on this again, and it says. But how do I select which screen it goes on? Sorry about this.
That's okay.
Let me just. I did this before and it was fine.
Yeah, we've done it a few times here, so I'm trying to figure it out. Maybe it's because I'm still a presenter too. Let me see. Maybe it's on my end.
Okay.
I know I'm the organizer and you're the presenter, and you have control of the screen, so
you can't see any of my screens at the moment.
No,
right?
I can see one that says "Connect to Go Webinar." Let's get started.
Oh, okay. So I just got to try and figure out, because that's one of my
it'll
that's the
show
screen.
Yeah, it'll show whatever screens you have up and give you a chance to click.
How do I select a particular screen? Do you know how to do that?
From the drop-down menu, it'll say Screen Share. Share screen.
And can I? And will it allow me to? Let's just see if there's any way I can switch screens. Oh, this is really not good.
Don't worry about it. We'll figure it out. Maybe you log out and come back in and try it again.
Hold on a second.
Maybe you're stuck.
Because there should be a way I can make another attendee presenter.
Well, I think I'm getting some help here.
Because I can't find. There's nothing that says select screen 1, 2, 3, 4, 5 or whatever.
Huh.
And there was before it allowed me to do that, and I can't see how it's doing.
Okay, why don't you do this, Peter? Let's try it. Log out and see it, and come back in and see if it gives you the option.
Okay.
Again.
Okay. Stay with me, and I'll be right back.
Okay. Thank you, buddy. By the way, Stella, if you're still here, I don't know, you may have left to go pick up the girls. Peter's having trouble showing the correct screen. I had him log out, and he'll be coming back in. So let's see here. He'll be coming in as... Okay, there he is. Let me try it again. I'm going to make you the presenter. Okay, Peter, try it now. Oh, no, he's not here. Okay. In the meantime, guys, do you have any questions for me while we're waiting for Peter? Oh, Peter's here.
Maybe this has come up now. So let's see if show my screen. This didn't come up before, so let's try this. It didn't give me the option. I just have a colleague with me, so I'm just trying to figure it out. Hang on a tick. Okay, we're going to try it one more time. Okay, I think there's a.
Maybe it's our software. Or, I don't know. It doesn't show me as the presenter anymore. Okay, Peter, if you can hear me, says you're not connected to the audio now. Let's see what happens.
This would be. Oh, look.
Yeah.
That's
okay. That's a
okay.
one.
I think. Whoa, what's going on now? It's gone. Let's try it again. Okay, let's try it. Okay, Dale, I think we figured it out.
All right, beautiful.
Can you see my screen now?
Yeah, we have the.
Can you see an S&P chart?
Got it.
Okay, phew. Wow. Okay. No pressure, right? No pressure. No pressure. Okay, good. Good. Sorry, folks, keeping everybody waiting there. So
I was watching some movie and it showed the old green screens, people using Quotron machines. Things were pretty simple then. All right.
God.
Anyway, so, okay, what to you is a reversal signature? Was last week the way it closed on a weekly?
Yeah.
Or I'm curious about what your definition is for a reversal signature.
Yeah, well, I mean, my reversal signature usually comes about if we get about a 12% drop from a preceding percentage gain. And we saw about 15% last week relative to this gain up here. So, I mean, if we work out the point gain. We work out the point gain, and if we get about a 12% swing around, I like it particularly if that's combined with breaking out a previous low. It was marginal, but we did that here, and we took out this top here. I was writing up in my reports that if we relocated wave 4 to this grey one here, if there was some sort of running flat in there, this could be 1, 2, 3, and this could be 4. But you can see we've broken the overlap here as well. So generally, my rule is that about a 12 to 15% swing from the previous gain. Okay. And this is about 15%. But it's also conditional if you can get breaking out some previous sort of higher lows like that did. And it's penetrated. So that's generally how I'm creating a reversal signature. I mean, that looks pretty good now.
It's just based upon a percentage of give back based upon a previous advance or decline.
Yeah, the trick here is, of course, you've got to know where the previous upswing developed from. Well, it's pretty obvious it developed from December here, so that's a bit of a no-brainer. But of course, there might be other difficulties if you're looking at a third wave completion, for example. You've got to measure it from the origin of the third, not from the origin of the first wave, to get the percentages right. But it's just practice and knowing those things, and it's not too difficult to do. Ideally, of course, I used to work off in the old days on the basis that any intra-hourly 5 price swing event in the opposite direction to where we've been traveling to would be enough. But generally, sometimes you get either a 5-wave pattern in the opposite direction unfolding with too small a move to qualify a larger reversal. So I came up with this 12 to 15% rule. That generally works pretty well.
Cool. So what would negate this count and give you a different count that this is not a top? So, risk management is everything. You had those areas up there. They were even as high, I think, as maybe 28.40 or 50. And any reason why we stopped at 28.20? That looking back, you could see now the reason?
Yeah, well, I mean, when the impulse pattern sort of developed, we had this definitive 1-2-1-2. We could see that on the New York Stock Exchange Composite Index. and the Wilshire 5000, which was pretty good. And we sent out an update back in January and said to everybody, don't be too quick to sell this market on the rally, because even though there looks to be 3 price swings that started this kickoff, we think that this is an impulse wave. And I can show you that in a moment, what we forecast at that time. But one of the price ratio measurements, if once this dropped below this overlap, we could basically eliminate getting up to 28.70. Otherwise, this would have been a first, second, third, fourth, and fifth would have taken us up to those numbers. But in actual case, if we take a correlative ratio, 1 to 3 here, pull back, and I mean extension ratio, 1 to 4, you can see it's coming in there, and that's a minimum requirement for finishing a 5th wave, and we've done that now. So I don't think there's too much trouble with that. We can see it on the subdivision here. You can see here we go back to the 5th wave, 1, 2, 3, 4, and then this 5th wave coming in. Here's 28.18, and actually technically it's a 5th wave extension. So 5th wave extensions, whenever that occurs, I always extend 1 to 3 by 61.8. This was a very good measurement back in 2011 to pick silver topping out at just below $50. That was going on a 5th extension. And if you do that and just click, you're going to get the extension level coming in. So yeah, this break, you see this break below the 27.37 3/4, this level here on Friday. That was very important to negate any top. So the only time, in answer to your question, the only time this would now negate is if we break that high. Okay, so you have to risk the high of the move to know if there's more coming. Probably that secondary high here. Yeah. What's that? 2,800 about. 27.99. The actual high was because this could technically be 1,212. So you could come up a bit higher here. But that's your stop level, so you have to protect it from there, really. Okay. All right. So good call on flipping in the precious metals, Peter. You saw something different. I mean, last time we were on, thought after that rally, maybe we'd see 1120 again. But after we had that rally, the way it started to go, a WD can. If you don't learn how to change your mind, you won't have any change left. And very nice. Not being stubborn. You had evidence the way gold recovered that said it was different, that it was starting to show bullish implications, and silver as well. So where are we at there after this recent pullback? Well, the pullback is quite interesting, really, because it's not a typical Elliott correction. It has unfolded into 3 ways, but the third sequence down to last week's lows at 1281, that's what we call price expansion, and that's characteristic of third waves. And that's very difficult. I think probably one of the most difficult things in Elliott wave to learn or to be aware of is that, if you have an impulse wave, you get something like this going on. And then you have this is a third wave, of course, and then you get a fourth and a fifth like that develop. But sometimes, and this is really where the headache comes, you can have A, B, and then you have an elongated C like that, and it looks exactly the same as a third wave. And that is one of the biggest problems with Elliott wave, where you get this happening. Now, it doesn't happen so often, but you have to be aware that it can happen. And it's a real mind boggler, because you can never distinguish, unless you're within the larger sequence, whether you're going to have a fourth wave rally and then a fifth down, or whether you've actually changed direction. When I looked at this initially, I thought, well, okay, we work on the terms of probability. This downswing is exhibiting price expansion, which is typical of third wave behavior. So this could be a fourth and a fifth, but that means a fourth wave correction in the larger schematic is really very, very deep. And I'm getting, concerned then that it's going to be as deep as this, which is going to come into close proximity of overlap. But in this particular case, I could see that there might be some dollar weakness coming back in the short term. Okay. And I took a bit of a probability risk and said that this is probably an elongated C wave within a zigzag. And and that the gold is going to resume its uptrend, because this is about 38% from here, from the November low. It's a bit more, actually, a little bit more, I think, if we go up and measure it. Yeah, you can see it's a fraction more, but not much. But it's in the right area. And so I thought, no, look, let's play the probability game in a different way here. Let's see that this is an elongated C wave. I don't often predict those, I have to say, because they're very difficult unless you know what the bigger picture is. But I have to say that when you look at the bigger picture, and you've got 5 waves up here, can we prove that 5 waves up from November's finished? Yes, we can. Because if we go to let's put in a fib 1618 extension, and we go to the initial 1212 sequence here and extend that by 1618, you can see there it is. There's the projection.
Yeah. You know what made me think it is that it's that this is a possibility is because if gold did decline to 1250, wouldn't it, just in sympathy, negate the bullish picture in silver? Like silver went far enough on that pullback that, if it started trading, back around, back underneath, let me just look at the level, that $15 level. I mean, where would silver be if gold was going to 1250? So, $14, so if silver's good, I don't think gold could go to 1250. Do you?
No, I don't. That's why I changed my mind last week. I looked at it again and I thought, actually, I see a bit of dollar weakness coming in. I think we're involved in one of these elongated C waves. They're really a problem, and you have to be very, very in tune with what's going on in the bigger picture to circumnavigate such things. But I think that's what's happened. Plus the fact that when I had silver down as an expanding flat here, because see this swing from 1550 to 1622?
Yeah.
Let's take a look at that. I'll just zoom in a bit.
What a nice stop hunt above the previous high before it turned lower. I mean, it took out the previous high by a couple of cents and then
which it should do.
Right.
It should do if it's a part of an expanding flat, of course. Here you can see I've put in a 60-minute bar chart, but can you see this distinct 3 price swing event up here?
Got it.
You see, it's not. You've got a very typical zigzag there. It goes up. You get a nice sort of break in the middle of the action here, and actually I do it like this. This is a sort of a Gartley sort of thing, and you get this sort of like channel. So this is very typical. This is very typical of a zigzag, and you got 3 price swings down. We take out the previous high, so we know that's a correction. So now we just need 5 waves down. At first, I thought maybe there's a bit of a hidden 4th in here and a 5th. I think this is enough, though. It's not great. Normally, I like to see a bit more trading range for a 4th wave.
Is that an ending diagonal at the bottom? Excuse my amateur.
Well,
could it be?
you're trying to see the fleas on the back of an ant.
Right.
Okay. So, I mean, yeah, maybe. I won't disagree. Right. But look at the proportions. I mean, generally speaking, if you're looking at an expanding flat, about 85% will end up about within the 38% limit of wave A, which is here. So technically speaking, if it had been a nice synced 5-wave pattern down, it should have stopped 1524. The other 15% or 12%, it would have been 61.8%, and it even went beyond that. So that's an unusual pattern sequence for it to get down that far already. So I think that's the limit. And what I've done is in order to get a 5th wave measurement, I've extended waves 1 to 4 through by 1618. So I've done an inversion here to get up to 1693. I think that's going to be all right, actually.
Okay. So you're talking about potential dollar weakness. My work on that high, there was just so much momentum. The RSI reading and the Dixie was well over 80. It's hard for me to, top pick something with that much momentum, but, it could be a high, but normally it's not the high. So is that kind of what you're looking at here? Just a slight pullback in the dollar, or could it turn into something more significant? I actually have some lines that come in up around 102 on my weekly chart. How deep can this be, and what are going to be the demarcation levels to tell us it's going to be more than a pullback to, the low 96 range, as you're showing here?
Well, the biggest impact to what happened last week after the ECB news was that we broke this 97.36 level here.
Yeah.
Because up until that point, you could have measured up a zigzag here, and that meant a downtrend. Well, we were already pretty much clued up on the fact that it would continue to break that high, because this decline from 97.36 down to 95.83 does measure as a zigzag as well. And I'm starting to get pretty bearish on some commodities like copper. And I think there's going to be a big downswing. There's a combination of that, either dollar strength, or we're going to start to see a real downturn in the economic data points, which is going to pull copper down anyway. But I felt that there was a measure of dollar strength appearing in copper prices and a few other commodities, which is going to drag commodities down. And I was really waiting to see if we could break this 97.36 level, because that was a key point last week. If we hadn't have broken that, the dollar could have been a zigzag upswing from January's low, and it could have pulled us back inside the range for a more constructive range trading effect for wave B here in this box. So
right.
That could have brought it down. But the fact that we took that out means that we can't consider this to be a zigzag anymore, that the bias is towards the upside. So I think we're engaged in wave C up to 102.79. Wave C began from this low back in September.
Okay.
But this swing up from January, if I just pull up that chart again, this swing up in January has obviously got a lot of overlap. Now, it's either a series of 1-2s, and if it is, then the limit to this decline is about a 50% retracement back to fourth preceding, if this is a 5-wave upswing, and that will get us back to 96.76.
Okay.
But if it's possible that this is a leading diagonal, in other words, this is the first wave within this 5-wave sequence that began in January for minute wave 3. And if it is a diagonal, a leading diagonal, the subdivisions are 5 waves, so that's consistent with a series of 1-2s, so you can't make any distinction with that. But what we can do is, if this is finishing 5 waves as a leading diagonal, we just measure the retracements. Now that could bring us back down to something like the 61.8 area here. So what we've got to see now is, for both scenarios depict the dollar weakness this week coming in. For a 50% retracement of this swing, we'll stop here. And if it stops dead at that number and starts to turn up, look for your reversal signature and then buy the dollar. But if you start to sort of penetrate below those levels, then we might start looking at 96, around just above 96 even.
Okay.
But that's probably about the limit, I would have said, to the dollar's decline before we start getting the next swing up. And you can see the corresponding movement in the euro dollar, because, again, a very important aspect last week with the ECB news was that we broke 112.15. That was very important to do that. That means that the downtrend's continuing. But we've got, there's a possibility this is also a diagonal. And if it's a series of 1-2s, then the second wave correction will trade up to the 50% area, 112.98 this week. But if you see it punch through that, then we might get to fourth preceding. So we're putting the fifth. And you can see, actually, that's interesting. Look, 61.8 area is back to here. That's potentially what the maximum I would expect. Don't forget, if this is a diagonal, this is the fourth wave. And Elliott always says that the corrections often go back to the origin of fourth preceding degrees. So this would be coming back up to this area anyway. So if you don't see a reversal signature from just below the 113 level figure, that's easy to remember. If you don't see it there, and you can check the pattern before it happens, then and we punch through, then pull back the selling, wait for a slightly higher number up towards the 114 figure area, and then we'll put in the shorts back again there.
Okay, very interesting. And you know what? I wasn't even going to go there, but you talking about being bearish commodities, you're not precious metals. So the economically sensitive ones, copper, there's a lot of bullishness in copper right here. I even thought that the chart looked more constructive to me than than the precious metals. But you know, looking at things like Freeport McMoran and okay, so now we have maybe we could take a look at copper and see why you're so bearish copper. And does it have to do with perhaps this correction in the S&P and you know, the numbers being global weakness becoming the strongest narrative again?
I think so, yeah. I think there's a definitive shift. Some of the banks that we've been talking to last week and even this morning are all getting a bit overworked up about the recent downgrades in GDP growth from the OECD last week. You saw that, ECB. We haven't seen much. I mean, you've seen a bit of GDP slow down in the US, down revisions a bit, but nothing too much there, which is one reason why the dollar, I think, will go up, because it's just a case that, okay, we're getting a global slowdown, but which one is slowing down faster than the other? Well, obviously, Europe's slowing down fastest.
Right.
The US will be an outperformer in that slowdown, so the dollar goes up. I mean, that's the logic behind it. But you see, copper, we declined. We're in a second wave correction. It began June last year here. And we've had a nice 5-wave swing down into August time. Now, don't forget August.
You're showing the NASDAQ. And, you know, I'll tell you, Peter, well, I'm going to have you back. I didn't want to stop you, but your screen's been flashing throughout the interview between your charts and some kind of Windows insignia. But, well, you know, the information is too important. I'm a little hypnotized now. I'll be, you know, walking like a zombie saying, Microsoft. But anyway, you'll see it later.
I'm really sorry about that. I have no idea what's... And you can't see my copper chart right now.
No, right now it's a NASDAQ.
Oh, that's weird. I haven't even got NASDAQ up on any of my monitors. Okay. So hang on a tick. I'm gonna deactivate and reactivate and see what happens. Dare I do it? I don't know. I'm gonna try anyway.
All right, try, and if not, you know, we'll wrap it here. And really appreciate you coming in. And
I'm sorry about that. No idea.
You know, I don't you know.
How does that work?
Technology. It's, you know, something's going on today on Monday. So, yeah, we're having, you're still showing the NASDAQ chart flashing.
I haven't even got the NASDAQ on any of my monitors, so I don't know how that's going to happen.
All right. Well, I tell you what.
I'm sorry about that.
That's okay. For anyone listening that can't see your copper chart, can they contact you and get that look and perhaps some type of trial or something for them to, you know,
No, sure. I mean, if you're listening in today and you'd like to see the copper chart, just ping us an email. Our email address is services@wavetrack.com, and if you can't find Wavetrack, just Google it and you'll find us for sure. And there's a help desk line on our website, which is wavetrack.com. So you can always request it there. And I'll know if you've been listening to us talk today. If you just mentioned copper, I'm quite happy to send that through. I'm really sorry that it's not showing. But generally speaking, Dale, what I'm looking at is, I mean, everybody's probably got access to a copper chart. But if you go back to last June, you'll see initial swing down in August, which times the low with the initial decline in the euro, and the peak in the dollar. And we've been in a corrective pattern since. And copper's not quite ready, but it's almost ready to start turning down. It might jump this week up a little bit more, but a tiny bit, not much beyond the previous week. And then I think we're going to get a comparable decline that we saw in June to August last year, down again. And that, if you can imagine it, is what what I'm trying to develop here. And I think that's showing us that we've got a little bit of a problem ahead here over the next few months.
Peter, thank you so much. You can also follow Peter. He's a must follow, in my opinion, at ElliotWave_WTI. And ElliotWaveTrack.com is also his website. And Peter, well, we'll do this again soon, and hopefully we don't have the hypnosis going on. But if I had to be hypnotized by anyone's analysis of market structure, it would be yours.
Oh, thanks. Well, I don't want to send you sort of like eyeballs like Car in Jungle Book. You know?
Yeah, you could put your watch away that you've been swinging in front of my eyes. But Peter, thank you so much for stepping up today and joining us. And good hunting, and always appreciate your views and outlooks. It's a very important part of my intelligence gathering, which I'm a big believer in, and you're integral in that.
No, thanks, Dale. Thanks very much to you and to everybody. And I hope you have a successful day. And we'll catch up again soon. And hopefully we'll get all the charts working next time somehow.
Okay, buddy. Everyone, that's Peter. Peter Goodburn, you're welcome, Forex Gal. Manny says get Peter back soon. We'll do that, promise. And that's a wrap. If you're in New York, go see the boys. Okay, go shake their hands. And we'll see everyone for Turnaround Tuesday. Good hunting the rest of the day. Thanks again, Peter. And see everyone tomorrow. Oh, I almost forgot the tagline. Anyone know what my tagline is? Don't just count your pips, count your blessings. And I'll see everyone tomorrow. Adios. Thanks, Peter.